So much for the introduction, Robin. Happy to be here. I'm sure that Patrick feels the same way. Like Robin said, I'm a global product marketing manager here at Salonis, and I've spent the last 5 years or so working with financial services, specifically trying to understand what are the pain points, what are the trends, where's the industry headed, and really understanding how technology can help solve for some of those different problems in a really intelligent way. Um, Patrick's going to do the second half of the presentation, so he's going to get into a little bit of his background then. So without further ado, I'm just going to go ahead and kick it off. There we go. All right, so today's agenda, we're going to talk a little bit about the current state of affairs in banking. I won't spend too much time here because it seems like every presentation is covering this a little bit. Don't want to get too repetitive. We'll talk about what some of the challenges in that current state of affairs are being caused by, and it really boils down to process friction. We'll talk a little bit about process mining. I hope people have heard of this kind of technology before, but it's a really innovative way of tackling some of these challenges. We'll talk a little bit about our methodology and how you solve process friction from a conceptual and ideological standpoint, and what kind of tools you could use to help implement that kind of ideology. And then we're going to end with one of our customer success stories from a top 5 US bank and talk about how they were able to use this kind of methodology to improve their state of affairs. All right. So current state of affairs. So I think that there's a lot of buzzwords being thrown out. We hear the words challenger bank, we hear digital native, we hear peer-to-peer, and the real question is, why are these things important? And I think that some of the past presentations touched on this, but it's not digital native for digital native's sake. These challenger banks are not just new banks. The reason that they're coming into the industry and causing some disruption is because of the customer service that they're allowed to afford, right? In today's day and age, it's all about customer experience, and I know the last two presentations touched on this heavily. And so that's why we're talking about this. That's why we're talking about enterprise software. That's why we're talking about digitalization. It's because we want to enable a better customer experience. And so we've seen, and this isn't really new, putting money into technology, right? If we look at this timeline at the bottom, we invested in mainframe technologies and then PCs, and then we had the ERPs come on board, all the way up till now, where really most things are being done in the cloud, and any new businesses that are popping up really are cloud native. And so this digitalization is rapidly changing how organizations create value and how they compete. That's a direct quote from Gartner, and again, it pertains directly to the customer experience. And we can see that there's an insane amount of enterprise applications within a business, and an insane amount of money being spent on that software, and it's getting a lot of attention from the top. 2 out of 3 CEOs say that digital strategy is a top priority. So obviously very important. Unfortunately, with all this investment and with all this innovation that we've made, we're still seeing that the processes aren't delivering the expected results. And again, coming from Gartner, digital transformation projects are over budget and behind schedule. If we look at KPIs in some of the world's best run companies and some of the best run financial services institutions, it still takes on average 20 days for customer onboarding. And the net promoter score is still around 25. And only 68% of customers turn out to be repeat customers. So there's obviously a lot of room for growth here and a lot of potential. And I'm not saying that we haven't done a good job and that these aren't better than than where we've been before. But we're wondering, we should be asking the question, what exactly is holding us back here? And so I think that to kind of tie those two things together, there are a number of different business processes underpinning the entire banking value chain. And we can see that there's some areas here like governance, risk and compliance, customer, finance and administration, other back-end activities, and also operations. And within each of those, there's different processes. So let's focus on customer specifically for a second, because that again, customer experience is king at this day and age, but we're looking at bringing them in, right? We're looking at onboarding them, their different application processes, the different ways that they would interact with the bank for service, and their entire customer lifecycle, right? Those are all processes that are managed within the bank. And within those, you might have some different KPIs and metrics of how you measure those, things like conversion rate, obviously, retention rate, and things like net promoter score, right? But the important thing to understand is that these processes are really the levers that we're pulling. These operational centers are really what we're using to drive that digitalization, that digital transformation, whatever you want to call it, and improve on those metrics. So I think that it's important to understand that like the company is an organism, if you will. It's living. It has all these different processes and functions, and they come together to achieve those end business outcomes. And I think that particularly in times of COVID, and particularly in banking, we've seen an increased focus on a couple of these key areas. One of them is obviously to reduce costs. You need to become simpler and more efficient. Obviously, keeping as much cash in-house is very important for a lot of companies, and one way you can do that is by reducing costs. And so something at Salonis that we focus on is improving things like straight-through processing, increasing automation, and intelligently automating or getting people the right information at the right time if true automation isn't precisely available. Improving that customer experience, again, this is a huge point here. We really want to deliver those frictionless customer experiences by discovering the pain points and eliminating them. And I think that discovery piece is something that we're going to talk about a little bit more. It's, I think, a really key piece that a decent number of organizations, when they go through these transformation projects, really miss out on or don't give it the justice or the due process that it really deserves. If you go ahead and you say, okay, we're going to transform the business and we're going to start with automation, which I think is something that a lot of businesses think about. Automation is obviously a hot button topic right now. But you don't know exactly what you're automating, why you're automating, or what the exact impact on your business outcomes are going to be, then the automation isn't super valuable in a vacuum, right? If you automate a bad process, let's say one of those processes that we're talking about, you're just making that bad process faster. You're just accelerating the problem. You're not actually solving for the core issue, which is the fact that you have these different points of friction within the process. So this process discovery and this process intelligence is a key point. You need to make sure you understand how everything operates at the very beginning, and that will directly lead you to improve the specific parts of your processes that will improve the business outcomes, things like customer experience. And then the last one is reducing risk, and I think that this is more relevant to this group than perhaps any other because of the nature of financial services. It's a regulated industry. There's obviously a lot of risk involved, but particularly because of COVID, we need that new level of transparency, and we need to know those compliance risks, because if we take shortcuts to succeed right now in times of COVID and we just push the buck down the line and kind of cut corners, it's just going to come back down the line, right? So we need to make sure that while we're doing these things, while we're reducing costs and improving customer experience, that we're also making sure that we keep our risk in check, and that we're adhering to all the regulations in what we're doing. So just one more, I guess, example to really drive this home, and then I'll pass it over to Patrick, is when we talk about process friction, we look at things like, for instance, a credit application process or a KYC process, where we start with something like an application getting created and it ends up getting leaked or it ends up getting withdrawn. And really, in between those two key points, when it started and when something bad happened, it interacts with a bunch of systems, right? There are different people that are processing this in various IT systems. They're interacting with legacy systems within the bank. They are looking up things in Excel sheets, Googling things, communicating with different peers, right? So there's a number of different touch points and interactions that ultimately lead to these negative outcomes. And sometimes these rigid and complex processes are the fault. It's not really the processes' fault. It's this rigid and complex landscape that's causing it. And there's intermingling, right? KYC is part of the application process in a lot of points. So it's its own process, but they're also all connected. So we need to make sure that we're looking at this as a whole, and making sure that we're identifying these points of friction in between these different systems. With that, I'm going to go ahead and pass it over to Patrick, who's going to bring the presentation home.
Great. Thanks, Max. I'm Patrick Galbraith. I am leading our financial services and insurance verticals here at Salonis. I'm relatively new to Salonis, but I've been in the data and analytics space for the past 20 years. When I started at Salonis, when I started the interview process at Salonis, I wasn't quite sure what it was. First reaction, maybe it's another BI tool, but why would the market need just yet another BI tool? And then when I got into really evaluating the company and learning more about it, I realized it's more like an X-ray machine, right? And an X-ray machine that will jump in, right, take a look at a process or at your processes, understand the straight through process, but not just the straight through process, but all the different variations that your process may have. And these have been hard to see until recently. Prior organizations would have sticky notes and do interviews and do a variety of different things to try to understand that process. But the fact is, there's huge value in digitizing and understanding that process. It allows you to streamline your operations, automate your operations, and if you think about areas like RPA and ITSM, system migrations, the ability to see that process before you actually go in and try to make and automate those changes is pretty huge, right? And so, companies kind of pre-process automation, they have a hard time seeing how that process is run. Even if they do understand the process is run, when they have problems, they're not quite sure what the root cause is. And then even when they understand what that root cause is, they don't necessarily, or they often don't have the means to fix that problem. So a little bit about Salonis. That's kind of what we came to market to do. We are 900 employees strong. We're up to over $100 million in annual recurring revenue. We have over 2,000 customer deployments, co-headquartered in Munich and New York City. We work across certainly all verticals. Most significantly, I would refer to as banking being one of our top verticals. We're recognized by both Gartner and Forrester as the leader in process mining. And and then a little bit behind kind of what the methodology of process mining is. I'm going to add a little bit of flavor to how Salonis executes on it. So first of all, it's the idea of knowing, right? Knowing exactly how those processes are run and how they touch your individual systems. Salonis will plug into your core systems and read off of your desktops and get an X-ray view of exactly how that process runs and all the different variations it takes. We then apply AI, to sense what those friction points are, what the root causes are, and what actions you might take to fix those. And then we recommend, those specific actions. And those actions may be to take a certain part of the process and move it to RPA. It may be to reassign it to a new queue. Or it could simply be on an individual basis, maybe to approve or disapprove a process based on the recommendation and the AI that we put together. And one thing that it might be missing from this slide is one of the things I think is the most impactful part of process mining is once you've automated that process and applied a product like Salonis across it, you have the ability to see that in a continuous manner. So if and when your process then changes thereafter, Salonis will always be on top of it, identify and sense what the issues may be, and allow you to continually improve that so that you maintain those improved processes. So I want to talk about one example that we have. We're working with one of the top 5 U.S. banks. We've been working with them for a little less than, but for approximately the last couple of years. We started in 2018. We did a pretty basic proof of concept. We did that on-prem. I would say that going through InfoSec was probably the most challenging process, but then we pretty quickly identified a process that they had in the area of trade and treasury around payments. And what they did was they were in a situation where their straight through processing was less than 30%. They applied Salonis, connected it to 4 different custom built systems, and they were able to improve that to over 50%. And from there, they're continually driving improvement across that process. We went from there, and now we've been deployed in over 15 areas inside the organization, We've been across their markets group in the area of trade settlement. In back office, so regulatory reporting, BCBS 239 reporting, they run 63 internal reports across 15 systems that they have been able to apply Salonis to improve that processing time. And even in the consumer bank area along their credit card lines, there have been a number of processes that they've automated, including some statement-based processes for their branded card holders. So we'd love to talk to you a little bit more about, oh, hold on, hit the wrong button, in our demo room, or answer any questions, but thank you very much for your time.
All right, great. Thank you, both Patrick and Max. If you have any questions, please go ahead and enter them into your screen. A few questions that I have for you here. You know, when you talked about just being able to sense those friction points, you referred to a knowledge base that's basically pre-built. But what I want to understand about that knowledge base is, can it be applied to all verticals or even to specific companies and learn? So, for example, how can the knowledge base basically learn about my specific company, or does it not do that in a customized sort of per business way? Is it more broadly learning through all companies?
Yeah, Patrick, I can take this one if you want.
Yeah, go ahead.
I was going to say that, yeah, certainly. So like Patrick said, we have over 2,000 customer implementations personally.
Mm-hmm.
So for us specifically, we've packaged that knowledge across those verticals that we've dealt with. So for sure, a lot of businesses are facing the same impacts. Again, everyone wants to improve customer experience.
Mm-hmm.
The same set of friction that we see is relatively standard between different financial services institutions. There is definitely variation, and you definitely do want to tailor both an approach and a software specifically to your business. So I'm not saying it's one size fit all, but there is a certain amount of lift that you can get upfront that you can bring to the table and make it a lot quicker to get time to value based on that experience. And I would say even for a new industry that perhaps we haven't had as much experience in, you know, one other than financial services, it's still possible to connect those systems and learn from that unique that unique situation very quickly using things like machine learning to do that kind of analysis.
Okay.
Yeah, and I'll add to that. If you think of the example of like invoice payment, right? So within a company, you'll identify a situation where maybe you have master terms that state one thing, but then in an order form it's another. Right, Salonis will identify that, but then you can apply that across all future interactions leveraging Salonis AI, so that you learn from that experience.
That makes sense. Okay, can you just kind of walk through how this? You mentioned RPA sort of at the beginning of the presentation, but how does this really? This feels a lot to me like RPA. It feels like taking pieces of a process and automating them. How does what you're doing differ from RPA, or is it just RPA?
I'll take the first pass at that one, Max. So I would definitely say it's different, and I would say it's the step before RPA, right? So if you think about Salonis does, we analyze the process and all the variations it takes. Then we make recommendations, and some of those recommendations may be to submit to RPA, or it could be to requeue, or to maybe edit or fix something in a source system. So we like to think that we're that X-ray machine that you kind of need before you decide what to move to RPA.
Yeah, I'd like to add a little bit there as well. So I think that there's really two sides of the house with any sort of transformation engagement. There's the analytical and the operational. The analytical is trying to answer the questions, what should we be doing? And then operational is obviously fixing them. So RPA is strictly operational, and maybe something like BI is strictly analytical. Salonis and process mining generally kind of bridges the gap between those two, where it does both. And like I was mentioning earlier, if you strictly automate but you don't know what you're automating against or what the friction points are, you're only accelerating a bad process. So it's that process intelligence to let you know these are the specific points you should be focusing on. And I think one other addition is that RPA is front-end automation, but there's also a lot of back-end automation that helps with these processes. RPA is more focused on like specific desktop activity, like steps that a person's taking, but there's a whole gamut of automation that you should be bringing in to fix a process. So it is more broad in scope.